Any other questions, brother?
Yeah, so Jamal said just one more time, the beginning time for London and New York.
Oh, the London session starts up around 3 a.m. Eastern Standard Time. And I'm saying like around like 2 or 3, because I give 2 times, like 2 o'clock, 3 o'clock, because daylight savings time, a lot of times it shifts up on people in different time zones. And for us Eastern Standard Time, I say 2 o'clock, 3 o'clock. And if you wake up at 2 o'clock, if you're an hour early for the London, it's still fine. A lot of volatility is still active during that time just before the London starts up. So it's all good. It's not like you're going to be sitting there looking at consolidation, when the London's about to start. Also, the New York starts up around like 8 o'clock, 9 o'clock-ish, around that time frame. So that way you can get in. If you show up early, you're going to get all the movement you want to get. And I want to make sure that you guys understand, like, that New York session is extremely, extremely volatile early in the morning. Okay? So essentially, you get movement is also around like 7 o'clock, because you still have that London session leading into it, right? Think about how the London session starts up. It's coming in from one of the most dead sessions, like the Sydney or the Asian and the Sydney session together, where the Australian market and the Asian market together don't move a lot of money. So that session is pretty much just late, real low volatility, not a lot of movement, leading into big volatility with the London session. The New York has that London session that's got all the movement, leading right into another big movement session. So right around that time, just before and when it first starts up, you get a lot of activity around that time. So you got to be prepared for that kind of movement in the market once it starts up, because it likes to run once it starts. Like it'll give you big pushes, and certain pairs like Aussie USD, USD JPY, different things like that will start to give you a much greater movement inside of those time frames. That's when you start seeing those huge candles pop up out of left field during those sessions. Now, if you're trading something like a Great British Pound in the US dollar, you got to be ready for that. And I don't suggest anybody who's brand new jump into Great British Pound pairs in their first week. It's a lot of movement and you get a lot of pips, but just like it's good, it's bad as well. Because the gift and the curse, it can give it and it can take it away at the same time. And I just don't want to see you guys, jumping in early with something and letting the market just tear you in half. All right. Any other questions, bro?
We got Amy saying, where do you find the speeches happening besides reading about it on forexfactory.com? Can you watch these people on TV have speeches that move the market?
Essentially, Bloomberg likes to show a lot of the speeches when they take place. MSNBC does it every now and then. And you can just go on YouTube. You can just type in Bloomberg Live. You can watch Bloomberg Live right now on YouTube. Like, they have it streaming 24/7. So you don't have to do anything crazy to get it. You don't have to, go out and call Comcast. You can literally get on your phone, cut on Bloomberg. Now, it has to be like a really big speech. Usually it's like they don't show speeches unless it's like something like Trump's doing a speech, or, like a prime minister, or like the head of the FOMC or something like that, head of the Fed likes to come out and do a speech or something of that nature. So it's usually like it has to be a big entity coming out doing something that's going to really sway the monetary policy in some country, or if not ours. All right.
Yeah. Awesome. Oh yeah. Also, Amy, real quick, before you start up, you want to get a tutorial on TradingView, please YouTube it. YouTube, how to learn TradingView or how to use TradingView. And it's tons of resources, tons of videos out there. And you can do the same thing with MT4 as well.
Yeah. Any other questions, or do we knock them all out?
Is looking at your chart right now, how can we tell where the market will go after D? What shows you the next big jump?
So essentially after D, when this happens, let me just pull back up my tool again. Essentially after this kind of move happens, I'm looking to see what I got strength wise from my RSI, right? Right here, I got a low leading to a higher low right here, right? So let me just, argument's sake, this one, right? From here to here is a pull up, right? And now from here to here, I know I got a low to a higher low. What do I have above it? I have, if I can get my tool to act right. Come on, work. There we go. So a low to a lower low, I know I have divergence. This is showing me a lower low. RSI showing me a higher low. Okay, boom. Now I know I got some strength. I can't take this until I see something break above. And what did it do? Broke above, multiple candles stay above. So now I'm just looking to see what I get from this standpoint, looking left, finding areas of structure, Right here would be, like I said, one of the zones in the past that price was having issues breaking out of. And what happened? Huge candle to the upside. And then right after that, we got structure all over again. Okay. And same thing, the rules apply all over again, right? If I'm looking at this and I'm going low, high, lower low, higher high, I'm going to take my trend line tool as well, connect the dots from here to here. If I can get it to act right. Hopefully that's it. Nope, didn't stay. There we go. Sorry, guys. My laptop is just doing what it want to do today for some odd reason. So now trend line is drawn. I got price moving to the upside. Now, for some people, this is still a scary thing. For me, I'm still looking at the rules, right? I got a high, came back down to my 8 moving average. What did it do? Bounce right back higher, bounce right back higher. But now, what are my tools showing me, right? I got to pay attention to the strength in the market. I got a high leading to a higher high, and my RSI is showing me what? A high leading to a lower high, showing me that the strength is already weakening. As soon as I get a break on my 8 moving average, game time. What happened? All right. Price came down, pushed back up. Price came down, multiple candles. I'm in. We got drop off. So always need structure, and look where you're entering at, right? I'm entering right at an area where price had issues in the past, broken it or retesting it, testing it, right? Finally broke out, came back, retest, retest, retest. So I know this area is a strong area where price likes to reverse. So the divergence makes a lot of sense seeing it here. All right. Well, yeah, I like keeping RSI on my chart just to make sure I can see strength. I don't use it as an entry tool. I just use it as more of a confirmation once I see price get back to an area where it's already reversed at. Okay. This just gives me a lot of confidence. Now, for me, this is just, showing you guys something as well that I like to use it with as well. Let me just pull this up for you really quick. Right here. I like using the RSI with a tool like the harmonic scanner as well. Because now, and if you guys who aren't in IML, this is one of the tools we get with IML where it basically tells us, what to look out for in the market when we see volatility on the horizon. And this tool just basically tells us like where buys are located, sales are located over and over again in the market. I'm just want to make sure I'm using this tool in the right fashion. So let's just say our time frame, Euro USD. We were just on Euro USD, so that makes sense. All right. So boom. Right now shows that the euro could be in position for an uptrend. I don't like my settings on 14. I'll put mine on 5. Right. Style, same thing here. 45 and 55. There we go. And now I'm going to drop one of my lines here at the bottom just so we can do an argument's sake deal here. You can see what I mean. Oh, wrong tool. Sorry, guys. There we go. This thing is skinny. Make it stand out a little bit. Coordinates 10. Okay. So right now, not low enough for me to jump in for a potential entry right now for a bounce. I don't see any divergence right now, and I need to see price break structure, right? So even though right now we're moving in an area where prices already came down, bounce, pulled higher, back down for a bounce again, got to make sure it makes sense for me. I can't take this trade yet until I start seeing something actually line up for me to jump in. Okay? Just real simple stuff, right? Even here, price made a high, came down. Let me just zoom in on this, right? High, lower high, slightly right inside of this move. So high to a lower high, and we can go back up and look at this, looking directly above, high to a higher high. So something like this would be a great trade for me to jump in for a sale because the divergence is already located on the RSI, and I can take that to the downside. But that's just one of the ways I like to use it in conjunction with the tools like the harmonic scanner. And I just need to be patient with this one to give it more time before I jump in on. Okay. Let's go back to our chart here. And I'm sorry, I missed a question as well. Oh, I saw something at the top about risk management too. I don't think we answered that one. Bernard said risk management.
I did answer her
Oh, okay.
thing. Using 3 to 5% of your account before you enter a trade. You probably can elaborate, but always look at the risk before the reward. They want to think about what is my take profit first, but we should be asking ourselves, how much am I willing to risk first?
Absolutely.
And
Absolutely, man.
yeah,
That is, oh my God, that is key. Like, if you can't assess a move in the market and say, okay, right here, we have an area where price has, let me just, you know what, I'm gonna get rid of the RSI for a second. We have an area here where price has bounced, broken below, came right back up, right? This was a really strong area. Price has been testing consistently right here. And then looking at this zone, same thing, right? So if I'm looking at this for a potential entry, right, and I'm looking to get in for a buy, or I see price hitting these zones and constantly respecting it, pushing back to the upside, my first thing is, how far do I want to put my stop loss below this based on what I have in the past? I got wicks down here that are moving. What is this? 12 pips. This one went down about 36 pips. So how much am I willing to risk before I can see some upside? And then on top of that, what's the first zone I can see where price can stop me out, right, and push me back to the downside? So something right up in here. So now I got to do the risk reward to the upside. If I get into this trade from here, I can see about almost a 50 pip or a 48, 49 pip gain. So essentially, if I take this trade, I'm giving myself maybe what was this one? About 36 pips of a stop loss and about 50 pips of a gain to the upside. Is it worth my time? And what time of day am I entering this trade? Because now I can't jump into a trade into something like this, where if I jumped in here, this is, 3 o'clock, 4 o'clock, 5 o'clock, 6 o'clock, 7 o'clock, 8 o'clock, 9 o'clock, 10 o'clock, finally got a big candle, right? I want to make sure I'm jumping in at the right time so that it makes sense for me, because if I take this trade before 5 o'clock, there's something called the swap, where every day, if you're in a trade before 5 o'clock, your broker charges you a fee every single time. Even if you can get into that trade at 4:59, they're going to charge you a swap fee. Okay. So now you're dealing with the spread, the commission, and a swap fee just because you entered that trade before 5 o'clock. All right. So essentially, just to answer your question, Norma, once I'm out of the trade and I'm looking to see what the market will do next, I just have to be patient and wait to see if it hits levels. That's all. I'm just looking left to see what's the next thing for it after I'm out of the trade, to see what can happen. And I'm just riding the next movement from that standpoint. And like I said, I strongly suggest you just get used to trading one or two pairs first. And then once you start to master it and you understand the levels that the price likes to stop and start at based on those two pairs, you can go to the scanner, wait for your pairs to pop up on the scanner, and start analyzing it and have a better understanding of what to look for, using stuff like the scanner to kind of guesstimate or figure out where your niches are with this pair. You will start to find your footing. It doesn't take long to start to really learn a pair. You just got to give yourself more charting time and then back test all day long. All right. Let's see what else we got here. What is this? See.
I'm not sure what Blair is asking about, -10 or just 10. Is that the RSI
Oh
setting?
no, just 10. Just 10 for the settings down here, not -10. I don't know why I put it that low like that. But I think it's just showing you the little dash by every number. It's not a negative. It's just like, -10, -20, -30, -60. So yeah. Facts.
Tabitha, I would just say, learn market structure. Or if you talk to reach out to your mentors and really sit down and get one-on-one training on market structure. And it's going to break down. Now, we're not jumping into a buy. And as soon as the buy is over, we jumping right into a sell, and we just jumping right back into a buy all day long. Somewhere along the line, you're going to get whipsawed doing that. Okay. So, we take a trade 20, 40 pips, then we start over and reassess things. So I would definitely say the key for you to be thinking about is market structure. No strategies. Don't worry about the indicators. Master market structure and reach out to your upline or your mentor to put you in the right direction to master market structure. And then you will get all of that stuff.
Absolutely. Like once you master structure, everything else falls in line. Everything falls in line. Michael already knows those whipsaws, man. Woo! You'll be looking at the market just go up, down, up, down, up, down. You won't know what to do. You get spun around somewhere. It's like shaking Steph Curry. You find yourself in a parking lot somewhere. So you run into a situation where you you get too exuberant. And another thing is, most of the time when you get caught up in a whipsaw, it's because you weren't taking enough time to do your analysis right. You were just jumping in off emotion. You felt like this. You weren't really taking the time to say, okay, let me let the market really make a decision from here, because sometimes it will come down, test the level, make a lower low, but you got to be patient and let something like this come into fruition where it made a lower low here, but made a higher low on RSI. And now we start to get that push away. I always like using this 8 as just a gauge to show me that the strength is there to push higher. So even if I do have a little bit of drawdown, I know I'm still on the right side of this based on the overall strength in the market and where I'm entering the trade. Okay, that's a really important thing for me. Where I'm entering is a big deal. All right. And this is a pair where I don't even trade Euro USD. That's why I'm showing you guys something where this pair typically likes to just go sideways a lot. And you'll be able to come into something like this and be able to make consistent profits just because you understand structure, right? You have highs, lows, lower lows. Boom. Everything starts to make sense. And now all you do is draw trend lines, right? Let's just say right here, market hit an area where we know all the sellers live. We'll go back, get our trend line out. High, low, lower, high. I can't draw a trend line until something breaks below this area. This candle did that. Trend line goes from here to here. All right, done. And what did the market do? Pull back up. So my first rule is put an area put a line right here in this area to let me know that price cannot go above this zone. If it breaks my trend line, right, the end of the world is not there yet. We're not done with this trade. If it breaks my trend line, so it broke my trend line, right? And what happens? Price bounced off my trend line and pushed up and did what? Hit our area structure all over again, broke lower, and then what? From here, made a lower low. Right after that move happened, guess what happens? All over again. You reevaluate your trend and you put it here now. Mm-hmm. All over again. Same old, right? Price makes a lower low, and now we see price pulling back up, going down, and the same thing, it happens all over again, right? So now high to lower high, all right, and price is staying within our structure, moving lower and lower still. This is how I can stay on the side of a trend. And like I said, when I use like the 8 moving average and things of that nature, everything will start to make sense, because right now, I don't even have the 8 moving average up here. All right, let me put the 8 on for you guys. All right, favorites, exponential. Move that up. Like purple. Sweet. So now what? What do we got? Price comes up, tries to test. What does it do? If it breaks above our 8 moving average, next candle lets us know exactly what price wants to do. Finishes back below, downtrend is still strong. All right, same thing here. Price tries to push up. Next few count, drop back below. Same thing here, pushed up, back down. And once we got a push above, and then this candle stayed above after this one, we got a push above, and now it's staying above. We got more growth coming. We know from this point we're dealing with either reversal or we're dealing with consolidation coming up. And that's sure enough what happened right here, where we just kind of like bounced, went up, bounced, came back down. So now we're dealing with a market where we got to be patient and see exactly what we get from this standpoint. But I'm just showing you guys exactly what I'm looking for inside of this market, just using simple tools, right? Nothing crazy. As the market's moving, I'm just evolving with it, right? I got a low right here. I want to see if price comes back up and retest. What happens right here? Price broke below this area. Wick came up and retested, pulled this lower. Now we're making new lows right here, right? What did price do? Drop below. We couldn't get a retest of the wick. All good. Same thing here. Price dropped below. What do we do? Price came back up, retested with the wicks, pulled us back down in the profit. It's the same rules over and over and over again.